on either side, and my debits are equal to my credits. Damon Williams paid his assistant $750 in wages. Okay, you're paying something. Anytime you pay something, you're using what? Cash. So the asset cash is affected. The other account that's affected is, are wages something I can get back, or is it something that's related to producing revenue in a month? It's related to something that's being used up in order to perform, for the business to perform operations during the month. So it is going to expense. So we're going to have wages expense, and we've got cash, the asset, right? So the new one here we have is expense. It's negative on the right side of the equation. It's positive on the left. Assets is exactly the same. Positive on the left, negative on the right. Okay, so wages expense and cash, an expense account and an asset account. Wages expense plus, and they both have the identical setup on the plus minus debits and credits, left and right. What happens to wages expense? Is it going down? No, we're actually paying it, right? So wages is the expense part that we're adding to is going up. So wages is going to go 750 here. And what about cash? It's not going up, it's going down. I'm paying 750 out of pocket. So it's going to be on the credit side. So we debit wages expense, we credit cash for 750, and we are in balance. We've got a debit of 750 and a credit of 750. Learning objective 5. Give me just a moment. Round page 57 in your textbook. I'm sorry, 67 in your textbook. That's where this is at. Preparing a trial balance and explaining its purposes and linkages with the financial statements. Now, what is a trial balance? It's shown there on page 67. It's a listing of all accounts in the ledger and their balances, totaling of all debits and credits. Is proof that debits equal credits, which is our and that the accounting equation has remained in balance. So, used as an aid in preparing financial statements. Usually, at the end of the period, when we get ready to do financial statements, the first step is an unadjusted trial balance. Now, this one just says trial balance because we haven't got to the adjustments, which we will in the next chapter. But it's a trial balance, which, just so you know, it is the unadjusted trial balance. Okay. Notice how it stops, how it starts at the top, just like our financial statements did. Who, which is the company name, Damon's Campus Delivery. What, which is the name of the statement or the name of the work paper, which is trial balance, and then when. Specific date, just like your balance sheet, June 30th, 2013. Okay, so we bring in things in ledger order, which usually starts with assets, then our liabilities, then our equity accounts, and then our revenues and expenses. Okay, all of my debits, I do what? I total them up. All my credits, I total them up. Guess what? They're in balance. So what I do a double underline, says this is in balance, and I've just proved that my ledger, at least, is in balance as far as debits and credits, and the accounting equation for the company is still in balance. So that's my starting point for my financials, is the trial balance. All right. Just looking through here for a minute. All right, so let's look at a few questions here at the end of the chapter. To debit an account, these are drawing tools here. To debit an account is to enter an amount on the left side of the equation, or left side of the account. And we said that was true. This is found on page 73 in your textbook. Liability accounts normally have debit balances. That's false because they normally have credit balances. They're on the right hand side and they normally have credit balances. Increases in owner's equity accounts are entered as credits. That is true. Revenue accounts normally have debit balances. They're on the right, so they would normally have credit balances. So that is false. And to credit an account is to enter an amount on the right side of the account. That is true.